So chatty this morning. Good morning. Thank you for coming today. I just want to make one quick announcement about class next week. So our lead schedule that went out is just going to get changed. So Lori Kirsten is actually going to do a class next Monday on FinTrack. She's going to go over all of the FinTrack forms and what you need for them, supporting documents, etc. So that's individual, corporate, and receipt of funds, I believe. I think that's it. Secondly, like I said last week, we're going to do the TC10K. So we've registered Pemberton Holmes as a team. We have like 6 people that have joined now, which is really super exciting. So anyone else who would like to join as a team, I did send an email out yesterday, and I can send another one out, or just email me, and I'll give you the details on that. The 10K is on April 26th. And then just to keep in your calendars, April 17th in the evening is the Pemberton Holmes Agents Award. The awards, not just one. So today we're going to start off with Fernando Zilli from Tribeca Mortgages. Peter DeMeo should be here shortly. And then we have Sandi-Jo, the president of the Victoria Real Estate Board. She's going to give us some updates on what to expect in 2020 at the board. And then we have Paddon from our Strata Property Management Division. So we'll just start off right away with Fernando.
Good morning, everyone. Good morning. Thank you. I don't know. I wasn't expecting to wake up to snow this morning, so being up on Bear Mountain and a sports car wasn't exactly what I was hoping for, but ended up making it down the hill. A couple of things to talk about today. I want to really talk about the bond yields first. I don't know if anybody's been keeping track or seeing what's going on, but bond yields on December 18th. The bond yield was 1.7%. So that was kind of our peak that we had seen over the past probably 4 or 5 months. It's typical, I mentioned this before, it's typical kind of towards the end of the year that bond yields spike because the big investment corporations and they kind of shift all their books around and kind of pump up certain aspects of the market just to kind of alleviate some of the ups and downs over the year. And kind of show kind of a strong finish to the year more than anything else. But it kind of typically tapers off in January, kind of as we hit mid-January. And we saw that trend actually happen. So December 18th, it was 1.7%. And then it kind of bounced around between 1.65 to kind of 1.55. And it kind of did that pretty consistently right up until the Chinese stock market started having some turmoil due to the fact of this coronavirus and many other factors that are kind of going on. So the bond yield being at 1.7% on December 18th has been on a steady decline since this coronavirus issue has kind of come up. And now we're seeing bond yields at 1.29%, which essentially brings our mortgage rates on our back to that 2.69 to 2.99 range, kind of where that sweet spot was, where everybody was kind of out there hunting and buying and really comfortable with mortgage payments and things like that. Now, obviously, this could be, artificially low due to the fact that, there are some external factors causing this. But over the next couple of weeks, I wouldn't be surprised if we saw some really, really low interest rates come out. And if anybody is interested in kind of seeing what the bond yields are doing, just Google Y-charts Canadian 5-year bond yield. And then just click on the first or the second link you see, and you'll literally just see like a chart that just shows you on what day what the bond yields are going. And it's quite interesting to see, and you can pretty much make up whatever you want to make it make sense as to why it's doing that. It's I picked the coronavirus today, but it is quite interesting to see that it is based off some external factors that really cause the market to do that, and that's basically what fixed rates are based off of. So the variable rate isn't affected by it directly, but the fixed rates are directly affected by it. Wanted to talk about something else. Anybody have any questions on bond yield at all, or no? Okay. So wanted to talk about this because it's come up many, many times. And a lot of people think that I'm just trying to get a mortgage done really quickly and I'm just trying to make my commission and so on. But I mean, not to say that that's not true. The reality is that I am looking out for the client's best interest, because a lot of the times clients will come to me and say, I really want to buy this beautiful home. It's $1 million. I have a mortgage-free property, or I have a very small mortgage on my existing property, and I think it should be no problem because I can put $600,000 down on this place. You say, well, that's well and good, but we all know, the federal government has imposed pretty strict guidelines when we're trying to qualify for mortgages. And one of them is obviously the stress test. So I wanted to touch on a little bit about how the stress test impacts a mortgage a little bit differently than you've probably heard, because we all know that it's 2% above contract rate or the benchmark rate, whichever is higher. But this is kind of how it affects the mortgage when you're actually refinancing a property so that you can buy another property. Now, we run into a number of different issues if you're trying to refinance a property at the same time as having an accepted offer on a property. I'm sure Peter's run into this a few times, where you have to give a disclosure statement, or you have to give a declaration stating that you occupy this as a principal residence, or there's a lot of different things that can come up. But the reality is that if you have a home, let's say it's mortgage free, and you need a mortgage of $500,000, or you want to pull up $500,000 so you can put $500,000 down on your next home. So the qualifying payment for that, if you got a 5-year mortgage over 30 years, and I would estimate that most people that who are doing this would be selling that property at some point. So we look at putting them into a variable rate. The qualifying rate on that is $27.25 per month. So that's qualified at 5.19% over 30 years. If the client wants a line of credit, that qualifying payment jumps up to $2,962.34 per month. So about $250 a month just between the fixed payment and the line of credit. But if you're doing both properties at the same time, that mortgage payment of $27.25 being stress tested actually gets put on both applications. So both properties are now showing on the application at the stress tested mortgage. If, for example, you decided, I want to refinance my property, I want to take the money out to make sure that I can take the money out so that I can use that down payment for the next property, and you decide to close that mortgage even before you write an offer on another property, that mortgage no longer has to be stress tested because there's a set monthly payment for that mortgage. So if you had that mortgage intact before you made an offer, your qualifying payment for that mortgage on the new application is $2,127 a month, which is essentially an $860 a month reduction on the qualifying payment. That works out to about $158,000 mortgage amount, or income of about $24,000 a year. So it can make a massive, massive, massive difference when you're talking about timing as well as disclosure. Because for myself, I can ask a client, what's your intention? This is what you're going to do. When they go to the lawyer's going to read them the Riot Act and say, well, you're occupying this as a principal residence, but I also have another document on my desk that says you're getting a mortgage for a principal residence, so you can't file 2 declarations, or else you're basically falsifying the declaration. So you run into a really sketchy situation if you don't do it in a systematic order. A lot of people will say, well, why don't I just use rental income? Because I can use rental income from that property whether I decide to refinance it or sell it or not. Well, the amount of rental income that you would need to debt service that, because not a whole lot of people can just pull an extra $24,000 of income out of their rear end, right? Or $158,000 of cash. So the amount of rental income required to qualify for that $861, believe it or not, is between $1,600 and $3,200 a month, in addition to what you would probably already need to qualify for that mortgage in the first place. This is obviously excluding some specialty programs, net worth programs, and things like that, because a lot of those have different TDS or qualifications. But for your everyday customer who's trying to get the lowest interest rate and so on, these are the things that we're dealing with, and this is why we're so eager to try and get a client to start the refinance application, get us their documentation, get that file ready to close, and then if they see a property they may be interested in buying, I always recommend close that mortgage before you write an offer, because you're not putting yourself in a difficult situation. One, whether or not you're gonna get the money, and two, whether or not your declaration you're gonna be making at the lawyer's office is truthful or not. So pretty important stuff here. So if you do have somebody in that situation, I know I can see somebody wincing back there because we've been in a situation before where clients just don't feel like they want to refinance because they don't want to pay the legals, they don't want to go through the process. Maybe they have a penalty on their existing mortgage, they don't want to pay it. But the reality is there's a cost of doing business, and this is, in my opinion, very important. So is there anybody that has any questions? Oh, wow, okay, I thought there would be questions on that because it's pretty important stuff. One other thing I wanted to touch on is the difference between a mortgage and a line of credit when you're qualifying for a second property. So if you have a mortgage, like I said, the real payment is $21.27 a month. That's your monthly mortgage payment. That's what I put in the application when we move forward, as long as that property and that mortgage has already funded. If you have a line of credit, however, depending on the lender, it doesn't matter whether you've used the line of credit or not. I have to use the qualifying rate, which is the Bank of Canada posted rate or benchmark rate, which is 5.19%. And some lenders will use 25% of the outstanding, 25-year amortization on the outstanding balance. So I have to amortize the outstanding balance over 25 years. Or they'll use a 25-year amortization on the limit of the line of credit, even if it's not used. So again, a line of credit is a great option, but it can also be quite detrimental to a mortgage application because of the fact that you may not qualify. If your payment goes from $21.27 to $29.62, that's a pretty substantial increase where you may no longer qualify for the mortgage, right? So really important to look at that. Yeah, I think that's it for today. If nobody has any questions. Okay, thanks guys.
What is the amount you take for rental income for qualification? Van City, I heard, takes 100% rental income for your first 5 rentals and 90% on the remaining rentals.
Yeah, so there's a number of different lenders. For example, Scotiabank will use 50% of the income, but it's an offset. So if you're getting $2,000 a month, they will take $1,000 a month off of the actual mortgage qualifying payment, but they will also exclude property tax, heat, and strata fee. So you don't have to qualify for that portion, you're just qualifying for the mortgage. We do have lenders that will do 80 to 90%. That Van City program is really just released in the past 6 months. And they do use it. It has to be claimed on your taxes to a T. So if it's a brand new property, they won't allow for a economic rent letter to be used at 100%. It gets reduced substantially. And it all has to be claimed on taxes. So even if you upped your taxes you upped your rental income by $500 this past year because you had tenants move out, they won't include that aspect of it. We do have Island Savings. They also want it claimed on taxes, but they will allow for a reasonable increase. They will do 90% on the subject property with a basement suite and 80% for non-subject properties. And then we have a multitude of lenders that use things called rental worksheets. And rental worksheets, in my opinion, are probably the most underrated thing in our business because what happens is I'll put all my mortgages all the mortgages for the application on this rental worksheet, and then I'll put all the debts, the mortgage payment, the strata fee, the property tax, and so on and so forth. And if at the end of the day, after all the calculations are done, there's actually a surplus, not only do I get to wash out the mortgage payment from the application, I get to add the surplus to the annual income. So what happens is if you generate your rental property generates $12,000 a year in net rental income, I can take that $12,000, wash the payment out, and then just add that as other income. So it'll actually help you qualify for probably about an extra $75,000 in mortgage that you would qualify if you didn't have any of the rental properties. So it's a loaded question because everybody's different. The Van City program is very good, but it's not always the best calculation. Anybody else? Thank you.
Thank you, Fernando. And we have Peter here. Right on.
Thank you, Sacha. Very interesting, Fernando. I have to say, though, the declarations that Fernando mentioned are real. There's nothing fictional about those. Clients actually, and the lenders do require clients to declare whether or not the property that they're purchasing and the money that they're borrowing is for purposes of property they're going to be occupying, okay? And we do have transactions where we have to put the brakes on and go back to the mortgage specialist and find out whether or not the lender is aware of the purposes for which the loan is being obtained. So let's just be careful in that and maybe give our clients the heads up that that actually is going to happen once they get to our office. Okay, so interesting topic today. This one's from the Legally Speaking people. So what concerns could a waterfront lot, a rural farm, and an older urban home all have in common? They're all expensive? Is that what you said? Sorry, Josh, what did you say?
I said they're hard to insure.
Hard to insure. Probably all of those are true. But the answer I was looking for is they all could be subject to the provisions of the Heritage Conservation Act. You guys all know what that is? Yeah. So just a couple of preliminary things. So that's a provincial piece of legislation that allows either the provincial government or municipal governments to designate properties as having a heritage designation. The typical one that we see once in a while is the bronze plaque that we see appended to the certain homes. Some people call that the kiss of death. What can you do to a house that's got one of those appended to it? Sorry?
You can get grants for doing structural repairs.
Special grants. But can you really affect major changes to a property like that? No. Some people say, well, you can paint it. But even then, that paint has to be approved, believe it or not. So fairly limited in terms of the ability for someone to develop that property. Also, municipalities can designate properties on a heritage register. That's not the same. Has anybody looked at those? Oak Bay, City of Victoria, Sacha, they all have heritage registers, and you can actually search online and see whether a property is of interest. They search by civic address. You should do that on every property that you've listed or one that your clients intend to purchase. Why should you do that?
Because it's their use of the property that they're buying it for.
Well, if they're designated on the municipality's website, then there could be limits that the municipality might impose on that particular property for redevelopment, even though it's not formally designated a heritage site. And that can be, oh, gee whiz, the Queen slept in this house one night, or maybe the Meech Lake Accord was signed in that house, or gee whiz, the doors and windows in that house are turn of the century, blah, 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 and we don't want them removed. Actually had a client face that. It was a place in Uplands. And it was near the waterfront, so rather than being able to install nice vinyl, double paned, heat resistant, well-insulated windows, they had to go with the old turn-of-the-century wooden windows that expand and shrink and do all kinds of nasty things because of the weather. But they had heritage value, and then I think it was $2,500 per window. It was expensive. So you do want to check these things. But under the Heritage Conservation Act, a property can also be deemed to have heritage value. And that can mean a whole bunch of things. So in one particular case, which we're going to go through here, and it was a waterfront property, Heritage value can mean that it could be an ancient burial site. It could have First Nations middens. I don't know if you've ever come across that. Historically, archaeologists are very concerned about properties that have these things. So having said that, is there a place on the contract of purchase and sale where a seller is asked and a seller can provide an answer as to whether or not they know that the property that they're selling might be a heritage site or have heritage value? Any thoughts on that? You're right. Which section? You guys don't know by heart what's going on. I just happen to bring it. It's the last question, 4C, under the general section. Are you aware if the property or any portion of the property is designated or proposed for designation as a heritage site or of heritage value under the Heritage Conservation Act? So, in this case, it was a provincial court case where the buyer alleged that the sellers of a bare lot where Aboriginal shell middens had been found and answered no to 4C was incorrect. And the reason is the sellers had undertaken archaeological study to determine the extent of the shell middens that were found on the bare lot in order to establish a possible building envelope and obtaining a development permit for the property. Just in case you know, shell middens are concentrations of ancient edible mollusk shells and constitute evidence of ancient settlements. Kevin's laughing, he doesn't buy that. But we actually have some of those in our, so most of the waterfront areas, James Bay, Oak Bay, we got to be careful of these kinds of things. In any event, in this case, an archaeological study concluded limited portions of the property had some archaeological value, okay? And an archaeological expert would have to be retained during the building process. So you hire an archaeologist and they supervise the building process. So that's what it concluded. That was about it. Who pays for all that, by the way? The government?
Sometimes.
It's the homeowner. Homeowner, okay? So buyer buys the property, assumes the development permit that goes with it, starts building, and then soon finds the brakes go on and more investigation has to be undertaken at a significant expense. Buyer does what? Tries to recover all the expense and says, hey seller, you said no on the PDS. How does that work? Goes to provincial court with a claim. What does the court say?
Asked if you were aware.
Typical, Jens, typical. The sellers had focused on the heritage site portion of the question, not heritage value. Remember, we talk sites, we talk value. The court found that the sellers had answered the question honestly and to the best of their ability, which is all the PDS requires them to do. And the PDS is not a warranty, it's just an answer to a question. Most people accept it as a warranty. Well, I'm going to go ahead anyway because I got the seller to say X on the PDS and we'll sue them. We lose money. It's not a warranty, guys. It's an answer to a question. Okay. So really, really important to explain that to our clients. And just as a reminder, okay, when we are, and there's going to be more litigation with this, it's all but mentioned in the case. And what happened here was all the pages of the development permit weren't given to the buyer. So some pieces were left out. Is that the seller's responsibility? Whose responsibility is it to know what you're buying? Buyers. And who helps the buyer? Your friends. Exactly. So we want to be really careful with that kind of thing. Okay. So we probably haven't heard probably the last word on this case. But just a reminder about the property disclosure statement. Okay. First of all, does a seller have to fill it out and sign it? No, exactly. So you have to remember whose hat you're wearing, okay? And then secondly, if you are the buyer's realtor, does the buyer think you're helping them? Yeah, so they're not experts. And it's really important for you to stay in your lane, right? You're not an expert in all things, but you certainly can help your buyer obtain the correct information and point them to the correct professionals so that they get all the information they can to be able to make a decision to purchase a property. That's about it. Okay. That's all we have to do. Okay, go ahead.
Would the buyer be better protected by putting it in the contract that the seller warrants that there is no archaeological site or social site?
Yeah, well, that is a warranty. That is an answer to a PDS. But is that good enough for a buyer, folks? No. So you can't just put that in there and then don't look and just go ahead and buy it anyway. So you really have to complete your due diligence. So
Write that to the repercussion. The seller will pay all.
the seller will indemnify the buyer. Oh yeah, now we're getting there. Yeah, but do you still want your buyer to buy without? Yeah, no, we don't want to actually go down that route because litigation is no fun and it's expensive. Has anybody ever done an archaeology search, an online archaeology? Super. How tough was that?
It wasn't.
And did they get back to you relatively quickly?
Yeah, I was subdividing waterfront lot, so I didn't have a lot of choice.
There you go. So the procedure is, if you don't check online with the archaeology people, when you go and request a permit from a approving officer at a municipality, they will actually contact the archaeology people and determine whether or not that is a site of interest. And that's where this comes up. So really, there's no downside in helping your buyer do that online request with the archaeology branch and have that in your file that the request was made and you got the answer. And they tell you relatively quickly whether that's a property of interest or not. So you would do that, and then you would go to the municipality and you would search the website for any designation on the property, and I think you would have done your job at that point. Okay, Kevin?
I'm trying to recall a case a couple of years ago. Sorry, I'm trying to recall a case a couple of years ago where there was a property around Catherine Bay area.
Oak Bay, that one? Yeah.
Oak Bay, that one. Can
Yeah.
you remind me of what the repercussions are? to that?
750 grand that one got too.
And who paid that? It wasn't the owner, was it?
Yeah, the owner.
Was that the one where the owner's husband was a judge? And
Yeah,
went
that's
back
the one.
and fought?
Yeah.
They lost in the end?
Yeah,
Oh, I'm sorry. I thought they won. Okay.
What was the case?
ultimately, it's the owner. So this was a site on the Esplanade and major archaeology find and building the property had been halted for, I think, what was 2 or 3 years? I don't remember. So it was major costs. And most of the cost was the archaeological investigation done by a team of archaeologists and that was on the owner's nickel. And the, of course, owner went out trying to sue everybody in responsibility for that, but ultimately it's the owner. Okay, so those folks trying to defend the claim usually say, well, misrepresentation, warranty, all those sorts of things, but ultimately it's the owner. Okay, so the due diligence is most of the, most of the answer in these cases. Any other questions with that, you guys? Yep. Okay.
A few years ago, I went to the Oak Bay to check the heritage status. I was told by the one of the employees at the Oak Bay saying that only homeowners can register heritage status, not that the government can just impose it on homeowners.
Yeah, I'm not sure I agree with that.
So she gave me the incorrect information.
Yeah,
Thank you.
you can't imagine the restrictive events that'll occur with your home if it becomes designated an official heritage site. You're very limited in what you can do. I don't know a lot of homeowners that would want that. So having said that, and if you read the Heritage Conservation Act, it's up to the person interested in that designation to impose that, and that would have to be the government. So I find that fascinating.
Yeah, it was interesting because when I was doing the due diligence, and then I conveyed the what I received to the listing agent, and then the listing agent talked to her seller, and her seller said that she never done that to volunteer to want to be
It's
registered.
possible to volunteer and say, geez, I love this home. I never want it changed in any way. I think it's got major heritage value, or I think something really important historically in my house, so I'm going to make an application that it be designated. Sure, you can do that. So
Yeah,
you
but
can.
she said she didn't, but then it was registered.
Well, it was probably registered either before her, or I would think it was imposed on the property as a consequence of either municipal authorities or provincial authorities. Okay. Any other questions? Fernando?
I've got, speaking of Oak Bay, I've got a couple of these on my desk that have been sitting there for a while, but they're not urgent. What is the process to basically clean a title when there are some distasteful wording on the title, basically restricting the type of people that can live or occupy or purchase the property? Is that easy to fix, or is that something that takes a while to complete?
So the answer is depends. It can be easy if the restrictive covenant that's registered on the title only says that people of X descent aren't able to live here or buy property. That's easy. You can actually make an application to the Registrar of Land Titles, and there is legislation in place that allows the registrar to get that off the title. The problem is most of the covenants that we have don't just say that. They'll say that, plus they'll have maybe building scheme language and other things, so that they can't cancel those things. They can only cancel the wording. But to keep the other things in effect, they have to leave the document on title. So bottom line is you can't make that go away. So you'll get a notation by the registrar saying, okay, that portion of that covenant that says X is null and void, the rest of it is effective. So that's probably most times all you're gonna get.
In this case, the lender wasn't happy with
Of course.
said that, right? So even though it was not necessarily enforceable,
They wanted it
the
off.
lender wanted to review title. They reviewed it, but I don't know if it had something to do with a building scheme or a right of way or something that had to do with it. Yeah, it ended up being, it's been sitting there for basically 3 months, and I haven't been able to find it.
It's offensive, no doubt, totally offensive, but that lender should get counsel and get an opinion in terms of its enforceability. The lender's thinking, gee whiz, if people of a particular nationality or descent can't purchase here, then the value of the property is limited, but they shouldn't have that opinion because it's not enforceable.
Yeah, I don't think it's that opinion as much as it's the title that they actually requested to review, and then I could send it somewhere else and it probably would be fine because the lawyer would be required to review title and confirm that it would meet their guidelines, but it's just in this one unique situation where the clients don't want to go private, and that was the only lender that would look at the deal on, from a good standpoint, so we're still hunting.
Would that lender be happy with the notation by the registrar that the provisions of that portion of the covenant are unenforceable and void? Would they be happy with that?
Yeah, that's a good point. I'm gonna ask that today.
You could get that,
Okay.
absolutely.
Okay.
And it shouldn't be a hard deal. If they have counsel, get the counsel to do it.
That's great, thank you.
You bet. Any other thoughts or questions, guys? All righty, have a good week. Thanks.
Thank you, Peter. Okay, so I will introduce you to Sandi-Jo Ayers. Come on up, Sandi-Jo.
All right. Can you hear me back there now? Yeah? All right, well, welcome. Thank you so much for inviting me here today. I'm Sandi-Jo, for those of you who I have not met. I've been around since 1990 in the business, and I have the privilege of serving you as your president this year for 2020. I've been asked to just sort of give you a little bit of an overview of what's going on at the board, and I do have a fair number of things, and I do want some interaction from you as well. So first of all, PDP credits. Obviously, you know about the 6 directed credits and the 12 PDP credits, and of course the mandatory courses from the council for legal update. Who has done the anti-money laundering one? Awesome, that's great. Agency disclosure courses on there as well. So I'd just like to get you to make sure you check the Real Estate Council, BCREA, and our member hub for the courses that are out there that you do have to have done prior to relicensing. Well, who's used web forms? Okay, and how is it going? So some people, yeah, they're still bugs. Are you still getting some bugs in it? Yeah, a little bit. Okay, so as the board representative, I would just like to extend an invitation for you to share with CREA on their little helpline on the web forms on the bottom right, I think it is, and let them know what some of your issues are, because they are being open and trying to figure out what things are not working. So, not sure if you've been to the web forms course yet, but Dimpu Thandi, who does this, extremely knowledgeable, and I think there's a course coming up on the 14th. Not sure if there's still room in it, but let us know if you want more courses like that, because Kim will definitely, Kim Mantle from our education department will definitely bring her over again. A new thing that's come out, AutoProp. Anyone here used it yet? Yeah, 1, 2, couple people. So again, amazing new program that we've added to your dashboard. It's available on the bottom left, and AutoProp will give you a complete analysis of a particular property with photos from Google, and you can customize it. So there's an AutoProp session. I believe it's next week. There's a couple of them, one in the morning and one in the afternoon. So hoping that you get a chance to use that. So we have lots of great courses coming up in the member hub, and there is one called the Intro to Project Marketing. It's a 2-day course, and that one is on strategy and risk. So if anyone's interested in getting involved in doing a project management, that course is available. So as far as what's going on at the board, the Office of the Superintendent of Real Estate continues to work with the managing brokers. And there's a couple other things that they're working on, a code of ethics. They are looking at the code of ethics across British Columbia. We're not sure why we need to have another one when we have the Realtor code, but that is something that they're still working on. And again, that's the Office of the Superintendent of Real Estate. Realtor advocacy. So one quick thing. Anyone here heard anything about condo insurance going up? Yeah. Any examples in the crowd today of anyone that has had an issue yet? Say yet? I was hoping to actually ask Peter about if he's had any issues. So anyways, that is on your board's radar. We have checked with the BCREA. We want to make sure that we are a unified voice when we're talking to the insurance companies. So it's on our radar. I can't say any more than that right now. Realtor advocacy. So at our provincial level, we are working with the government on the taxation, so spec tax, all the rest of the taxes, and supply. What we're trying to do is get them to understand that it's the supply. Would you agree that that is our major issue this year? Yeah. At the municipal level, the Government Relations Committee is working on a program to educate stakeholders and collaborating with them to find ways to help with the supply. So basically, less red tape for our developers to be able to bring projects to the market rather than 3 years, a lot less time, hopefully within a year. Federal level taxation. So Fernando talked about this, the B20 stress test. We certainly as a board are trying to make sure that we're lobbying to have the government tweak that to see if we can, help our pent up demand from our purchasers who can't afford, some of our real estate here. And hopefully that tweak of the B20 may help. Again, we're just in conversation. There's a huge island-wide project that you may not be aware of. We are partnered now with the Vancouver Island Real Estate Board for a matrix. They have now gone to matrix, and we will have an island-wide MLS system. We have a very aggressive timeline for this. We are hoping to have it up and running for July. So you will see, some news coming out about that. So they have gone from Realty Server to Matrix with CoreLogic, and we are putting together a task force to work on that and to iron out some of the details in our common marketing areas. So that's a very big project, and I want to just acknowledge our last year's president, Cheryl Woolley, who did an amazing job with Kay Brones up there to get that going. So the committees that we have right now, we have a public relations committee who coordinates donations and volunteering, and that's keying up for February. Professional standards, of course, we always have lots of work there. Member engagement committee, they're starting the planning on networking events, so watch the newsletter for that. Who went to the lawn bowling last year, anybody? Okay, well, bring that back again. And I don't know if you realize, but this is the 99th year of the Victoria Real Estate Board. We've been in existence since 1921. Next year, we'll be celebrating our centennial. And so we do have some big plans for that. And the last thing I wanted to share with you is about the Victoria Real Estate Board. We went through the last 2.5 years. Are we going to build, buy, renovate? We are renovating. And so we will let you know as the timeline comes to fruition what that's going to look like for our board and our staff, and if we're going to have to make moves to different locations. So just watch for the timeline, and it'll be out soon, I hope. So that's the update from the board. Do you have any questions? Seeing none. Oh, hello.
Hello. You mentioned money laundering course. I just wanted, since this is possibly a moment to mention it, is that the charges for that course go up dramatically as time goes on. So it's currently $25. I think it goes to $50 at the end of March or something, and then its regular price will be $100. So it takes I think 5 hours probably of concentration. And so on, but that's a big saving.
Yeah, you know what? Thank you for pointing that out. And yes, I know a few people in the audience have done the course, and it does give you some information for sure and some tools to work with. So yeah, $25 till the end of March. So, all right. Any other questions? All right, awesome. Well, thank you so much for letting me have some time this morning. Thanks, Sacha.
Okay, so next up we have Tara Paddon, the Managing Director of our Strata Property Management. Do you want traveling mic? Or are you going to say that?
What? Oh, here we go. Where did my mouse or my mouse go? Oh, it's behind your computer.
Sorry, technology is not my friend. Okay. Sorry. One sec. Okay, so hi everyone, I'm Paddon. I'm the director of the Strata department with Pemberton Holmes. Thought I'd introduce myself. So thank you for having me here to speak to all of you today. I'm the director for the department. We've got a team of 5, myself, Dee Hensman, who is a senior satellite manager, as well as Eric Churlish, Strata manager, Cheryl Locken, who is a licensed assistant, and then as well as Kelly Rant, who is the executive assistant. I've been with the company for 3 years and just shy of 2 years as the director. Just wanted to give you a little bit of an update in regards to our department. Oops, that did not work. Next. Department update. So currently managed portfolio of over 40 Strata corporations. We are actually, in fact, growing. 25 years combined experience. We do manage a wide range of different properties. So they're land, residential, commercial, and some larger properties as well. We're in Victoria, Langford, Souk, Duncan, Cow Bay. We are actually expanding into Salt Spring Island as well. There are Stratas over there, imagine that. And then we also have a ton of new projects that are coming on board. We've got the Kettle Creek project. It's over 250 townhomes brought to you by Romspen out of Toronto. We've got the Luxton Townhouse project by Gordon. That's rolling out and phasing out at the moment as well. The Langford Townhouse project, again, another Romspen development. 98 townhouses, Residence 2, which is the Triple Crown, up and behind Costco. There's a ton of new development that's coming up that way. And then we've got the Pinnacle, which is another investment company out of Vancouver, Western Canadian Properties. So we are growing very fast. And as you know, we have a lack of agents that want to do this job. It is an extremely thankless one, and it's a lot of hard work. But we do what we do. So we have a ton of properties coming on, so we're looking for other licensed managers. We are bringing on other managers as well in the next 6 months. So we're looking to potentially double our portfolio before the end of 2020. I'm not going to read this, but I just wanted you to get an idea of what we actually offer through our services and our day-to-day. We are doing evening meetings and we're in development conflict. We are dealing with developer conflict. So we are working with developers, but as the director, I have to be very cognizant that I keep that relationship going with the developers and step away from the day-to-day management because we're dealing with a lot of warranty issues. So it's kind of a catch-22. So we are assisting in the preparation of all aspects. So we're attending the evening meetings. We're dealing with all of the construction, the maintenance, the budgets, dealing with owner conflict as well. Just another overview of the services in which we offer. And then you can go ahead to the next part, which is the actual accounting aspect of our business as well. So we do provide full service management. Some people have indicated in the past that they only wanted financial services. There's definitely a gray area in regards to providing finance only. So we only provide full service management. Stratamanagers.ca is our website. We're really quite proud of that website. It is very user friendly.
owners and councils alike can use that. I would encourage you to go take a look at it. We've got fillable forms on the website that include maintenance requests, bylaw complaints, and things like that. So into our gold referral program. So any referral that we do get from an agent, buyer, seller, friends, family, we're offering all Pemberton Homes agents the 40% of the gross second month of management fees. So you can see an idea of what that would actually look like. So we're trying to drum up some more business within our real estate department as well. There is an global insurance market update. I know that we had touched on that a little bit. Sandi-Jo was asking about it, and I know Peter will probably discuss it. I am not an insurance broker, so I'm not going to speak to that. But Christy Phoenix has provided for some information. Sacha will send that out, I think, after in regards to all of that. So please just keep in mind the condo, the sticker shock that everyone was seeing, and when we saw that news release out of Vancouver in regards to the jacking up of all of the insurance rates. We are not seeing that as much here. Christy Phoenix is an excellent insurer. We have a premium package insurance policies with them. So we on the island are not seeing it as much. It is imperative though, if you are looking at strata documentation, is to look at the year-to-year insurance. If there's insurance claims, they haven't gone through the renewal process yet. I just had a massive water leak over the weekend that's resulted in over $250,000 worth of damage, which was just water ingress on flooding. That will result in a massive premium increase because they had a crazy person throw shit out a window earlier in the year. So with two massive insurance claims, that premium is going to go up. Replacement appraisals are really important as well. So making sure that if you're reading the documentation is to make sure that their replacement appraisals are updated, they're insured for their market value, and that you're reading the minutes to ensure that if there are any pending claims and they're coming up to their renewals, to get in contact with those insurers. Other than that, thank you very much.
Good morning, everyone. A couple of issues I'd like to talk to you about. In the past 2 weeks, I had some estate sales with the executor being a non-resident of Canada for taxation purposes, which is not the same as non-Canadian for passport purposes. We need to understand that even a Canadian citizen can be deemed a non-resident for income tax purposes if that individual lives and pays taxes in some other jurisdiction. So you need to ask more questions than just simply, what is your status? Are you a Canadian citizen or permanent resident? You still need to ask a couple more questions just to make sure that we're not dealing with a non-resident issue. Now, if the deceased person was a Canadian citizen and Canadian tax subject, but the executor is not, unfortunately, the whole estate is deemed non-resident, okay? So we need to make sure that we understand that. And it comes into play when it comes to the 25% non-resident withholding tax. We all know that, right? Prior to completion. Any question about that? Yes, please.
So can a non-resident executor assign a resident new executor?
Well, it usually depends on the will. If you ever read a will, usually it has provisions. If the executor is unable or unwilling to act, then it falls back to another individual or another individual. So sometimes it may be wise for all involved to sit down and talk with a lawyer. Maybe another person would be able to take over So it's a really good question. Thank you. Yes.
What happens if a BC company owns property, but the director is a non-resident?
It's interesting. I had that question before, but the company is actually a BC company and lawfully and duly registered in BC. Then it's deemed as a BC entity. That's pretty much the short answer I got from the lawyers. Any other question regarding residency or non-residency? Okay. We also have to be careful because when we're selling, you guys are marketing and listed a home sold by a non-resident. I suggest as soon as you take the listing, you should send that person to the accountant, because it's not only the 25% withholding tax on the sale price, but also if they rented it prior, and God forbid they forgot to pay taxes. CRA is not going to allow them, they're not going to let them go until they file all those tax returns for all those years, and they clean up their tax situation. It could take an immense amount of time and money. So the first thing, just as Peter said, we're not lawyers, we're not accountants, but we're certainly in the position to send them to the appropriate professional as soon as we can. Okay? So that's something that we need to remember. Who? Yes.
I kind of feel like I'm flogging a dead horse with this, but I still don't have an answer. Foreclosures.
Yes.
Banks are selling the property without warranting that the seller is a resident in Canada or not. How does a buyer who's in either multiple offer situation in court or the initial first buyer to put in the offer have any assurance that they're not going to be on the hook for
I don't think you're going to be able to get like 100% assurance unless you manage to contact the person who is being foreclosed upon and you have contact and you confirm through them. Unfortunately, that's exactly what Peter said. There's no other way than you, the buyer or the buyer's agent, doing some detective work to find out.
Some sellers might be, some of those homeowners may be willing to share information if they have value in the home, but some may have none and they would want the right
Correct.
answer.
And herein lies the risk, and I agree with you. Let's not forget, foreclosure sales are not for the faint-hearted to begin with. This is just upping the level of risk again. So, yet again, if I were in this situation, I would talk to neighbors. I would talk to anybody I could to get some kind of some level of assurance. But I can feel the pain over there. Could I please have a show of hands? Who sold the property at West Hills? West Hills.
Sold the property.
West Hills, it's a developer. Okay, so the problem I'm faced with, and not only me, but agents who are actually bringing buyers to West Hills does not employ licensed agents. They have staff, sales staff. So for all intents and purposes, under the Real Estate Services Act, they are unrepresented, right? So what does the law say when it comes to unrepresented consumers? What do you have to do? So you're bringing the buyer, the seller is unrepresented. What do you have to do?
FINTRAC and disclosure of representation of trade services.
You have to go ahead with the holy four, right? You have to FINTRAC them. You have to give them the privacy notice. You have to give them the disclosure of representation. And you have to give them the disclosure of risks to unrepresented parties, right? These are the 4 items you have to give them. Now, West Hill says, don't bother. We're cool. We're professionals. We don't need that. Well, the problem is it's not so much them needing it, but us having to give it. So here's my solution, if you ever come to this. We're not gonna argue with the seller who is not willing to cooperate. You need to plug down the disclosures, they don't need to sign it, you need to serve it, right? You need to just plug down on the desk along with the privacy notice, okay? On the FinTrack, just say, seller refused. That's all I need. And just submit it to the office. Do not get into an argument, don't try to convince them. What I have to do is when I see that FinTrack coming in, I have to report it to FinTrack and that's the end of it. Okay, so do not disadvantage your client by trying to convince you that we know better, which we do. Just go with the flow, do the transaction, we'll take care of it at the back end, okay? All I need to know that you have served this entity with all the necessary paperwork. Does it make sense? Yes, it does. All right, I'd just like to add a couple of thoughts to this insurance quagmire. I still have some interest in a large condominium complex in Victoria. And I'm just looking at the proposed budget they're submitting. And the insurance went up 47% from last year. Now, what I would do if I were assisting, and just as Esther said, when you're assisting a Strata, you need to better understand when you're going through the minutes and you see the budget, the proposed budget, insurance is already high, so what's going on? If you see repeat water claims, water damage claims, rest assured that insurance premium will go through the roof. I'm not saying to scare the buyer away from this place, but make them mindful of the trend, what's going on. They need to know. The truth is, when it comes to Strata Insurance, we're a captive audience. We only have a handful of underwriters. We have a whole bunch of insurance companies, right? But only a handful of underwriters. And they don't particularly compete with each other. So that's basically the problem. I'm just wondering what the government is going to do about this, because it's becoming worrisome. So once again, please look at the minutes. We can't just shove the minutes over to the buyer or you read them. You need to actually take those 2 years worth of minutes. In some cases, 3 years worth of minutes, which is the case. When do you guys ask for 3 years worth?
Hasn't been an update to the depreciation report.
Correct. Thank you, Kevin. When there's no update to the depreciation report and you don't know what's going on in the past 3 years, there's a gap. Then in that case, you're going to have to ask for 3 years worth of minutes. I'm sure the management company will be very happy. Are you guys on?
We're on Strata.
Strata, so it doesn't matter. Is 3 years worth of minutes available on Strata? Can you go back 3 years?
Yeah, you can go back more than 2 years. We've got probably 4, depending on the age of the complex.
Very good.
We do have them there available.
Appreciate that. Thank you.
One question, Steve, sorry.
Yes.
Is there interest for having Jeff from Christa Phoenix potentially come to one of the realtor meetings to discuss the Strata insurance?
That would be a good idea, so we could get a specific view.
I think that probably would be, he did offer to come, so.
Excellent, thank you, I would appreciate that, thank you. I'm very glad to hear from the board that Matrix will be available throughout the island. I think it's great when you happen to have an up-island listing. You don't have to go through this song and dance with the data input form and faxing it up island or the board faxing it. So it is gonna be good, I like it. I like it. One more thing, when you're dealing with change order forms, you know, when there's a price change, cancellation, God forbid, or any kind of change, please submit it to the managing brokers by DocuSign or DigiSign or electronically. And I tell you why. Two major reasons. One is convenience. The second is I will have an instant copy of what I've signed. So I don't have to print and file. So please make sure that whenever you need a managing broker's signature on a change order form, just email it to us by DocuSign. But before you do that, please make sure the sequence of signers is the client first. I need to see the client's signature on the price change. I cannot authorize a price change without me seeing this, the seller's approval. Then I will sign it, and then you will process it with the board if need be. Does it make sense? Any question about that? Because I will print off and scan the change order form, but it's going to be a half a day by the time I get to it. So electronic is way more practical. Okay, any other issue? No? What else do I have? We talked about that insurance issue. So if you could please invite the gentleman, that would be great.
Yeah,
I would really appreciate that.
Sure.
I don't really have anything special. Any new listing you'd like to mention? This is the time to promote. New listing? New word listing? All right. Any special requests? You guys looking for something? Yes, please.
I have a buyer looking for a house out in Valley. So my first time buyer is looking for a
Just
house
pull
out in
closer.
At 575, 3-bedroom, 2-bathroom, small lot subdivision, something newer, ready, willing, and able to go. So please call me.
Okay. Could you please say your name? So
Oh, Shelley Green.
Shelley Reed. Do you have anybody interested in that? Thank you. Yes, please.
Just quickly going back to that insurance, if somebody wants the government to get behind this in some way, I don't know what that idea was, how that works, but this isn't just Strata, this is everybody's insurance. We get house and everything. Everybody's insurance is going up. If you have a look at this thing, we talked about Strata, but that's because if this person who's talking to you, if government, what are we asking them for? But I don't know, but if it's a big enough issue, because it'll affect every single person, everywhere.
It is impacting the lives of homeowners, definitely. What we should not forget that these big insurers, of course, this gentleman is going to give you a more thorough and detailed explanation. But Strata insurers, the underwriters, the big guys, they actually resell the insurance. They have reinsurers. So this is not just a few people kind of colluding and trying to screw us. It is a system-wide problem. And as a homeowner and as professional dealing with stratas, I have an obligation to actually limit the risk of a claim. So that's my job. That's my part of the job. And explain to strata lot owners, if it comes to small claims, don't make a claim. Suck it up, fix it, pay for it, because the saving will be way better, way bigger than relying on the policy.
And just to add to that as well, increasing those deductibles, so it's not even possible for them to even make a claim. So when you're looking at those policies and you're seeing a water deductible of 20, 25, sometimes I've seen it, I used to manage the falls, fun. But you've seen them really, really high, and it just prevents the claim from even going into the insurance policy. But the other thing to that is, if you flood somebody out below you, you're fitting a huge bill. So that is another thing to take into consideration, is looking at those deductibles.
Yeah, I remember, I have to tell you this story because that was one of my nightmares when it comes to buildings. This building is on Harriet, I'm not gonna name it anyway. And the Strata Council decided to replace all water tanks, hot water tanks at the same time. Which is fine, it's fine. They had the money. However, the plumber or who did this, all the water tanks were actually located in small cubicles within the condos. And every single cubicle had a heat sensor up on top. And what happened when he was cutting the pipes, he set off one. And of course, there was just the sprinklers got going everywhere, which was just half the problem because he was trying to fix it. So he went to the main water pipe and just undid something which caused a huge flood. So the water was there was a deluge from the 4th floor, of course, all the way down. And I was watching this man shriveling up in fear. Thankfully, another plumber came on site. They were able to actually shut the water off. But all I'm trying to see, an ounce of prevention. If this gentleman thought ahead of time that heat generated by his machinery may set this up. So thinking ahead sometimes makes wonders. But this was really nightmarish. And it cost over, I think, about $80,000 in restoration damages. Yes, please.
Just somebody, okay, so it's Shay Weber from Up Island. This is in the Victoria area. She has a client looking to purchase a home with RV parking and possibly a suite, open to locations around the $900,000 mark.
Okay. If anybody has anything like that, it's Shay Weber. All right, so I'm actually done. There's no special requests, no listings to talk about. So we're gonna talk to the insurance gentleman.
Yeah.
And I really appreciate your attendance. Thank you very much. Thank you.